Hi and Assalamualaikum. My name is Mohamad Nurhazim bin Osman. Today we will discuss about two companies which is Telekom Malaysia Berhad and Kuala Lumpur Kepong Berhad. So let's go. MFRS 134 is an accounting standard for preparing interim financial report such as quarterly or half-year statement. Its main purpose to provide timely and useful financial information to investor and creditor before the annual report is released. Under this standard, companies present condensed financial statement, meaning shorter report that will still include key financial information and important changes. Company must apply the same accounting policies as in an annual report. Interim report also rely more on estimate such as tax calculation. Overall, MFRS 134 ensure interim report are relevant, consistent and useful for decision making. I will present two significant events that have effect the financial position and performance of Telekom Malaysia Berhad based on disclosure to Bursa Malaysia. First, Telekom Malaysia declared total dividend of 31 sen per share amounting to approximate RM1.19 billion for the financial year. This is major financial transaction. The impact of the financial position is a reduction in cash and retained earnings. As the company distribute part of its profit to shareholder, although dividend do not affect profit directly, they reflect strong financial performance and healthy cash flow. Second, the company reported strong quarterly result. In one of recent Bursa filing, Telekom Malaysia record revenue of 2.99 billion and net profit of 686 ringgit.27 million for the quarter with cumulative profit reaching RM1.49 billion. This is significant operating event. The impact of financial performance is clear as profit increased substantially. At the same time, the financial position is strained through their higher retained earnings and shareholder equity. In conclusion, these two events show the Telekom Malaysia is performing well financially. The company is not only generated strong profit but also reward its shareholder while maintaining a solid financial position.
Now, I will be presenting how a listed company in Malaysia apply the concept of MFRS 134 using the example of Kuala Lumpur Kepong Berhad. This company prepares several types of interim financial statement. First, the interim statement of profit or loss and other comparison income. This compare the current quarter to the previous quarter and also the year-to-date performance compared to previous years. This allows businesses to track whether their expenses are outpacing their income during a specific period, helping them stay on top of financial performance before the year ends. Second is interim statement of financial positions. This compare the current quarter end to the end of the immediate preceding financial years. In simple terms, it shows how the company's asset and liability have changed over time. The third one is interim statement of changes in equities. This compare the financial year-to-date figures with the comparable year-to-date of the immediate preceding financial years. It shows how the shareholder equity changes during the interim periods. The last one is interim statement of cash flow. Similar composition style with statement of changes in equities, which is year-to-date versus last year's. This helps how effectively the company is managing and generating cash during interim periods. To conclude, MFRS 134 played an important role in ensuring the company, like Kuala Lumpur Kepong Berhad, provide timely and meaningful financial information throughout the years, not just annually. By requiring both current and comparative period for its statements, it enhances consistency and comparability for user of financial statements.
Part B, operating segments. Question 1, I'm going to explain what is MFRS 8. MFRS 8 operating segments actually requires companies to disclose their financial and descriptive information of their reportable segments. It uses management approach, which are the segments are based on their internal reports, which are regularly reviewed by the Chief Operating Decision Maker, CODM, to allocate resources and assess the performance. This gives users a view of a company through management's eyes. Question 2, I'm going to explain briefly what is Chief Operating Decision Maker, CODM, and provide two examples of CODM in Telekom Malaysia Berhad as well. MFRS 8 operating segments defines Chief Operating Decision Maker, CODM, as a person or a group who reviews operating segment information to allocate resources and assess the performance. It heavily focuses on the function of CODM itself rather than a specific executive title. For Telekom Malaysia Berhad, there are two examples of CODM. The first one is the Managing Director and the Group Chief Executive Officer itself. The CEO of TM Berhad, Encik Ahmad Huzaimi, he had personally reviewed a segment data for Unify, TM1 and TM Global to allocate a total actual capital expenditure worth of 1.59 billion ringgit Malaysia back in 2024. Another example of CODM for Kuala Lumpur Kepong Berhad is the executive chairman itself. The executive chairman for Kuala Lumpur Kepong Berhad is Tan Sri Datuk Sri Lee Oi Hian, who serves as their primary chief operating decision maker. According to KLK's 2024 annual report, he had reviewed the segment information which covers plantation, manufacturing and property segment. He also had made a strategic resources allocation decisions which involves refining the company's corporate vision, addressing the non-recurring losses worth of millions, and strengthen the property segment.
For question 2, identify two types of segmental report used in financial reporting and provide a snippet from a listed company financial report in ratio for each type of segmental report. There is two types of operating segment where it have reporting segment and non-reporting segment. Under MFRS 8 operating segment, a reportable segment is an operating segment that must be disclosed separately when it exceeds the 10% quantitative threshold. This means the segment revenue, profit or loss or asset are at least 10% of the total of all the segments. If two or more smaller segments have a similar characteristic, they can be combined and report together. In addition, all the reported segments must follow 75% revenue rule, where their total external revenue should cover at least 75% of the company total revenue. Next, a non-reported segment refer to segments that do not meet the 10% quantitative threshold. These segments are not required to be disclosed separately and can be combined into all other segments. However, if needed, this smaller segment can still be included to help achieve the 75% revenue rule. This ensures that enough of the company total revenue is properly disclosed to user. For the HKLK Berhad business segment report, where the item in the red column represent reportable segment under MFRS 8 operating segment because they exceed the 10% quantitative threshold. The blue color represent non-reportable segment as they are not the major part of the business operation. And the remaining items are grouped under others, mainly relate to the farming and management services. The second part shows the geographical segment, which is classified based on the company revenue generated from different regions.
Next, we will discuss the two key benefits of segmental reporting to financial statement users. The first benefit of segmental reporting under MFRS 8 is improved decision making through the review comparative performance. Segmental reporting allows users to compare how each segment performed instead of relying only on overall result, helping them identify strong and underperforming segments. For example, based on the segment disclosure of Kuala Lumpur Kepong Berhad, the manufacturing segment generates the highest revenue but record a loss, while the plantation segment is profitable. This shows that high revenue does not necessarily lead to high profitability and highlight inefficiencies in the manufacturing segment. This comparison is reliable because the results are prepared using consistent accounting policies and reviewed by the executive chairman. The second benefit is the ability to assess risk and uncertainty across segments. Segmental reporting together with related disclosures help users understand the level of judgment and estimation involved, reflecting different economic environments. For example, in Kuala Lumpur Kepong Berhad, the impairment of goodwill for plantation and manufacturing segment use different assumptions such as commodity prices for plantation and industry trends for manufacturing. This shows that each segment faces different risks, allowing users to better evaluate the company's risk profile. Referring to the snippet, manufacturing has the highest revenue but make a loss, while plantation is the main profit contributor. It also shows inter-segment sales and elimination adjustment to ensure only external revenue is reported. Overall, this information helps users compare performance and assess risk effectively.
And this is the references and appendices. Thank you.